I'm going to be talking to Kevin Birn, who is the chief analyst for Canadian oil markets, S&P Global Commodity Insights, about a new report that his team has put out about the oil sands greenhouse gas emissions. So welcome to the interview, Kevin.
Thanks for having me, Markham.
Now, look, you and I have talked a lot about this over the last 6 or 7 years. I don't know how many times I've interviewed you, but it's in double digits, and who knows, maybe triple. But the one consistent is that these emissions are not going down in a hurry. And why don't you start with giving us an overview of this report?
Sure. The latest piece is just updating. So I think Markham, you and I have talked enough. We developed quite an extensive, detailed oil sands model, comprehensive view of oil sands emissions. And this is another report out of it, taking the latest complete calendar year of data we have, which is 2021, and talking about how did the industry really respond in terms of recovery from 2020, which was the single greatest demand reduction the industry had seen, and then temporary shut-in as well. And so this is really a report out and kind of how the factors are shaping those oil sands emissions. And what we found is as the industry continued to ramp up an existing capacity, so it's in utilization rate of existing facilities continued from the kind of, you think of the nadir of 2020 through 2021, we had increasing volume coming from the oil sands, but with that came increasing amounts of absolute emissions with that as well. The growth rate occurred at such a pace, however, where it was overwhelmed in the sense the rise in absolute emissions, and we saw ongoing intensity reductions to the tune of about 2% as well.
Okay, so the last report was that the emissions intensity per barrel was about 70 kilograms of CO2 equivalent. In 2021, we're now sitting at 68, right?
Correct.
So we've had a slight decrease, 2% decrease in emissions intensity per barrel. But because the industry is now producing more, that means absolute emissions have gone up. How much have they gone up?
So you're correct. One thing we did talk about when we did the release earlier this year is we saw several more years of absolute emission increases coming from the oil sands into about the middle of this decade. I'd say our study continues to be on trend with that. So we would have an absolute increase simply because 2020 was a reduction in absolute emissions, but not because of anything going on in the oil sands other than the fact we had a great demand contraction and we had production reductions. So 2021, you can think of recouping that volume and then a little bit more, and that puts upward pressure then on absolute emissions versus 2020, and lesser to extent versus 2019, which was a higher level of output. And like I said, we expect production in the oil sands to continue to ramp up over the next couple of years as they fully stretch out that underutilized capacity. That'll put upward pressure on absolute emissions. Will continue to put downward pressure on intensity emissions. But after that midpoint of this decade, when that production curve starts to really materially decelerate in terms of that growth curve, what happens is those intensity improvements begin to add up and outstrip the production additions, and we get absolute emissions in our outlook thereafter. Now we can talk about how fast those absolute emissions come down, but a real key is the advancement of critical technologies in the oil sands in the back half of this decade.
Gotcha. Okay. So if I remember correctly, oil sands are about 11% of Canadian total Canadian emissions, and that's about 70 megatons a year. Is that correct?
We estimate oil sands emissions around 80 megatons a year right now.
80 megatons.
Yes.
Not 70, it's 80 megatons. Okay. And how many more megatons will the emissions rise by before they peak and then begin to decline?
Our projections from the March study that we released, which I think are still hold very true, we saw absolute oil sands emissions peaking just shy of about 90 megatons around that middle of the decade kind of point before they begin to decline again.
And how much do you expect them to decline by 2030?
Well, that's the focus of a lot of debate and discussion and analysis. Let me pull up. First of all, I didn't know we were going to talk about that study, so I don't have the numbers where we got to in that period of time in the front of my mind. Certainly, we had material reductions by the end of the decade, but you have this teeter-totter going on in the oil sands that we're talking about. You have absolute emission pressure that's going on right now, before you get absolute emission reductions on the other side. And then you have intensity improvements going through the whole thing that drive that. So the degree at which the reductions are achieved by 2030 really depends on the continuing operational improvements, which are the biggest driver of the intensity improvements we've seen. And then I'd say the large scale deployment of CCS is also critical. How much CCS and when it turns on relative to that 2030, we're measuring at one point in time, really is what's going to shape that absolute emission reduction by 2030.
Right. Now, I remember going through Suncor's investor presentation in the spring, and it said that it was going to adopt a different approach, the value over volume. So it's going to, for 5 years, it's not going to raise its production, which is now about 800,000 barrels a day. And instead, it was going to try to lower costs and try to find more value in the resource and cost savings in its operations. And it committed in that presentation to investors that it would lower emissions by 10 megatons by 2030. So the industry has promised 22 megatons of reduction by 2030. 10 of them are going to come from Suncor. Where are the reductions coming from Suncor? There's the Base Camp Cogen project, right? What else have we got?
So there's a multitude of little things that can add up to stuff too, Markham. So I can't speak to Suncor's specific technology road path. I don't think they've published it. When we've done our analysis, we've looked at a multitude of things, including things that include well productivity gains, so better placement of well, the advancement of what we call steam displacement technologies, which is a whole category that you'll hear people talk about solvents. We'll also talk about methane co-injection being within that category. You can have improvements in boiler and steam generation, so just more efficient, more insulation, or how you handle in the thermal operations. You'll get impurities coming up the wells, how you handle those impurities, because obviously if they stay in the water and you fire them, that's not going to convert into steam as well. The deployment of hydrogen, some electrification can also be potential. And then you get into large scale CCS development, which has been tagged as a major source of those emission reductions. If you look to the oil sands pathways in net zero by 2030, they're looking to get significant reductions from the development and rollout of CCS plants.
Okay, gotcha. Now let's talk about some of the trends by category of production, because that's one of the things that you've dealt with in the report. And what I find interesting about this is that there's 5 categories: mined, dilbit, PFT. So that's you dig it up in a strip mine, you put it into to process it with this paraffinic treatment process, and the emissions there are basically at the North American crude oil average. Is that correct?
Well, I wouldn't say they're North American crude oil average because I didn't publish a North American crude oil average with it. But I'd say they do set the lower bound of what the oil sands emissions are, and they came in at 39 kilograms a barrel last year at our estimate, which is the lowest number we've recorded from the oil sands as a category. That's also the newest form of oil sands extraction as well. Well, relatively speaking, the technology is not new, but the standalone mine producing dilbit is the newest form of oil sands extraction.
Now, let's talk about SAGD dilbit, so steam-assisted gravity diluted bitumen. And that came in at 61 kilograms of CO2e. And my understanding was that SAGD was going to be the dominant form of production for any expansion of supply going forward. Is that the case?
That's the case. SAGD, arguably, well, it depends how you do the math, has been the fastest and most significant source of oil sands growth over the last couple of years. And it also has some of the largest growth potential in the oil sands as well. And so we always had it dominating our growth profile to 2030, over the next couple of years, to 2030.
Okay, so at 61, that if that's where the growth is going to be, and it doesn't look like there's much opportunity for reducing emissions in that type of production, except for CCUS. Is that fair to say?
No, I don't think that's fair to say. A couple of things on SAGD dilbit, which is interesting to comment on. We noted a 3% decline in SAGD dilbit in our modeling of 21 versus 2020. SAGD dilbit had been relatively constant in our outlook for the last 10 years. So this would mark one of the greatest reductions we've seen. What we think happened was through 2020, there was a lot of pulling back in the steam injection, and they accumulated oil in the reservoirs. So as they ramped up their production and brought on newer wells that were more flush with oil, you can think about that, higher recovery off the front end, they had a sort of a deluge that pushed down the steam to oil ratios through 2021 and led to that greater reduction than we would have expected otherwise as we look forward. SAGD is one of these categories where you see steam displacement technologies and solvents having great potential. In addition to that, you do see the oil sands alliance companies talking about potentially exploring CCS from these plants, either going after, they basically are large boilers and cogeneration units that generate the steam requirements, going after the emissions that come off the boilers, or some of the facilities that have cogenerations, the cogeneration units is the CO2 coming off the cogeneration unit as well.
Well, I remember interviewing Harbier China from Synovus, who was the VP of technology. I think I've got his name right. It's been a long time. It's 2017. And they were talking about how they were going to roll out, steam solvent substitution, back in those days. And so they has the industry rolled it out, and is it scaling it up, or are they still back at the pilot, or they're just doing it on a small scale?
So there are depends how you define large versus small scale. There were numerous pilots, and they were obviously put on hold through the 2020 period because of the dramatic shock. We do see them coming back. We see some projects that are solvent projects coming forward. Imperial Oil, for example, has a solvent project in their portfolio. The other thing I should note that we've seen in terms of subsurface injection, we've seen an increase in the amount of methane being co-injected into the wells. And this has the benefit of continuing the pressure, which is required to recover the oil, but it obviously negates the thermal requirement, the steam requirement, which can have a significant greenhouse gas emission reduction as well. These two technologies in the paper we put out in March, which was a look at the absolute oil sands emission trajectory, we did find as a significant contributor, being a significant potential contributor to absolute emissions reductions by 2030. You're physically displacing steam, which is the source of your emissions, for something else. Now, what do they do with the steam is a good question. Obviously, there's huge economic incentives to use that steam to generate incremental production, and you get much higher efficiency from the plant in doing that. But if they don't direct all the steam back into wells, it will result in absolute emissions as well.
Okay, let's talk about CSS dilbit, which is the dirtiest form of production. It's up at an average of 108 kilograms of CO2 per barrel. And people have been complaining about CSS for a long time, because on the one hand, it's very carbon intense, and on the other hand, it's very profitable. Now, I remember Husky back when there was a Husky, and they had a lot of this, and they were making the point that CSS contributed significantly to government coffers. So put up with the emissions because we're giving you tax revenue. Is there any technology or process on the horizon that can, aside from CCUS, that can reasonably bring down CSS dilbit emissions?
Well, yeah, again, CSS is so where you have SAGD, which is a continuous horizontal well that's injecting steam, and you're continuously gathering from another horizontal well that just sits below the other one. Cyclic steam is you're injecting steam over a period of time into thicker reservoirs, and you're really building a spherical chamber, not a chamber along the pipeline, so to speak. And then you recover back up from that. So the solvent assisted technologies can be deployed in cyclic steam stimulation as well. And it actually has the potential to be very effective, because unlike SAGD, where you're pushing this material constantly through, you're soaking the reservoirs in cyclic steam. So like you can think about WD-40 on your bike chain. If you're blowing it past your bike at high speeds, it's going to work, but it's not going to be the same effect as if you could put chain in a container WD-40. And so that has that kind of effect. So I think solvent technologies in cyclic steam have a potential, but the cyclic steam, important for people to understand, is really about reservoir thickness, and there's only limited areas where you can use cyclic steam already, which is pretty much ring fenced around the Cold Lake region. And even in that region, we're seeing a preference in terms of when they go in and do additional drilling, they're going in and doing horizontal wells as opposed to cyclic steam wells as well.
What about mined synthetic crude? Because this comes in at 90 kilograms of CO2e. And my understanding is that a lot of that has to do with the upgrading process and using petcoke. And that's why Suncor is doing a major upgrade at the base camp. Is that correct? To get rid of burning petcoke? And can other companies do that?
So Suncor's process does not require the combustion of petcoke to produce synthetic crude oil. Petcoke is a byproduct in the production from the upgrading process. They're basically removing heavier ends from the barrel to produce a lighter product. That's essentially what upgrading is. So Suncor has freestanding coke boilers, best way to think of it, and they've been using the petroleum coke, which is a byproduct of their process already. Obviously, it makes it a very attractive feedstock from an economic standpoint. And they're swapping that out for natural gas because it's significantly less greenhouse gas intensive. And from that, they will see a change in their greenhouse gas intensity profile from that choice. Syncrude is another one, except in this case, the petroleum coke that's used in the Syncrude facility occurs in the coking process. It's not as easy to change. The other upgraders in the oil sands do not combust petroleum coke. They've already been designed to use natural gas. And most of the petroleum coke produced in the oil sands region itself is stacked and not combusted. Now, further downstream, if you took a dilbit barrel and you process it, you're going to generate petroleum coke. And a lot of that would be alternatively marketed, going into the power sector. It can go into cement, it can go into a couple other sectors. And that certainly on a full life cycle basis will contribute to the emission profile of a heavier crude oil relative to a light crude oil. Mined SCO I thought was quite interesting because if you go through the notes of the document, it really is a discussion of averages, right? So we talked about mined SCO being flat to modestly going up in 2021 versus 2020. But really, when you dig into it, 4 out of the 5 operations actually had intensity improvements. One operation had a disimprovement or went the other way, and it outweighed the improvements of the other 4, which is kind of interesting, which is why it's looking at averages is really helpful to understand what's going on, but looking at the things behind averages is also illustrative that they may not represent any individual operation as well.
True, but it's funny how the averages haven't moved and haven't fallen, despite what happens and what changes on the individual project level. So how are we to understand this? How would we wrap this up, Kevin? Or have we done it already by saying that, we're going to see an increase. We've seen an increase in emissions to absolute emissions to 80 megatons a year. We're going to see a further increase to 90 by mid-decade, and then we're going to see some emission reductions by 2030, but we don't know how many. We don't know yet. It depends on CCUS and how fast they can get it implemented. Is that a fair summary?
We will continue to produce annualized updates and try to provide some clarity on what we see going on in terms of oil sands emissions. And there is this interesting interrelationship with all upstream oil and gas generally between productivity, production gains, and then obviously the energy required, and then the absolute emissions, and then intensity improvements. And I think what we do see is the rise we saw should be expected in 2021 versus 2020, because 2020 was obviously an anomalous year, and we're going to recoup production and we're going to recoup emissions too. But we also saw intensity improvements. I think overall we remain on the trajectory that we anticipated. We kind of saw a peaking or a decoupling of oil sands emissions from that production profile in around the middle of this decade, in around 88 to 89 megatons before it bends over. The industry has announced ambitious targets for 2030, but time is really tight. We're sitting at the end of 2020 to get those reductions that require large-scale industrial projects like CCUS and stuff like that. That's how I'd wrap it up, Markham.
Kevin, a pleasure as always. Thank you very much.